candle, and this is a point. This is called open point, and this point on top is called close point. Imagine this is the wick of the candlestick, this is the body of the candlestick. Now when you go to the when you open your business on a daily basis, let's say if you open your business with say 500 Ghana cedis, and at the end of the day you close with 1,500 Ghana cedis. Now you would agree with me that you have made some gains or some profits in the market, and your profit went in the positive direction. Am I correct?
Yes, please.
That would possibly be a green day for you, a day where you would be smile. Well, 1 minute. I think I need to redo that again. That would possibly be a very green day for you, a day where you will be smiling like this out of the what? Out of the market.
Yes.
Now, if you open your market on another day and then you come, maybe you open. So, in the case of the red candlestick now, here is, let's say you open, here is the inverse. The top becomes open, the bottom becomes closed, right? So, let's say if you open your market on this day, let's say you open with 5 1, let's say you open with 600 Ghana cedis, and instead of it to go up like this, instead of it to go up like this, the 600 Ghana cedis start coming down, and you start seeing starts coming down, and then maybe you close with like 250 250 Ghana cedis. So that is what now ends. That's what you now close the market with on that particular day. Close with 250 Ghana cedis. The body of your candlestick will not be looking green and fresh. The body of your candlestick will be red, and then possibly the individual will be having a very sad day in the what? In the market, because at that point in time the individual did not make any money from the market. So this is the body of the candlestick, these are the wicks of the candlestick, and the body of the and wick of this candlestick, they represent a very key element of what forms the basis of our charting analysis. Now, as we move to our charts, our next place where we will see those charts um, quickly. So let's come back to trading view. Trading view. So on trading view, you see the different financial instruments that are there. And let's go to crypto. Let's see some of the candlesticks that we can find with Bitcoin as a financial instrument, and see how big these candlesticks actually look in the market. So you click on see on super charts. See on super charts, and you can see this. Typically every candlestick has a wick and has a what? A body. Every candlestick has a wick and has a what? A body. And every candlesticks are usually green or what? Or red. Now let's come to the context of our time frames and other types. The concept of our time frames and other types. Now, for the time frame and your other types, what to do is, you can see we are looking at this chart from a 1 week perspective. We can decide to look at this chart, instead of looking at it from a 1 week perspective, we can decide to look at this chart from a 12 months perspective, from a 3 months perspective, from a 1 hour perspective. And anytime you switch between this time frame, even the structure of your candlestick will change, or the structure of your chart would also will change. If you switch between this, you see the structure of your chart will change. If I switch to 4 hours, you will see the structure of my chart would also what will change. Can you see that my chart has changed? If I switch between, if I switch it to a 1 month, a 3 months time frame, you will see the structure of my chart will change. Can you see the structure of my chart has changed?
Yes, please.
So this is us looking at Bitcoin from a 3 months what? From a 3 months time frame. From a 3 months time frame, you can see Bitcoin going all the way down to 2009, 1st of October 2009, and 2013, 2016, down up to where Bitcoin currently is in the what? In the chart. So this is Bitcoin. If you are looking at Bitcoin, so every candlestick here represents, because we are looking at it from a 3 months time frame, every candlestick here represents three months. So if you look at it, this is October to January, 3 months, to April, 3 months, to July, 3 months. Every candlestick here represents 3 months. So that means that for this candlestick that is green, all of these big candlesticks that are green that are in one compartment, can you see this candlestick? This candlestick represents the 3 month activity of what happened in the market. Same thing with this candlestick, it represents the 3 month activity of what happened in the market. Before we got to this candlestick now that's showing us a bit of red in the 3 months time frame, here means the candlestick before it, which is this green candlestick, represented the 3 months activity in it. And that candlestick, if you look at the bottom of my chart, it is showing January 1st 2023, Sunday January 1st 2023.
Okay.
That was when it started. And you can see that from in the last 3 months, truly, before we come to this candlestick now, which is we started from April 1st 2023. We are currently in May. So in June, July, this candlestick would finish forming all its peaks. Yeah, so even though we wanted to see a market come down, truly, this market may possibly come down nothing less than, the most this market can possibly come down is maybe like another maybe 19,800, and then find a good bounce up forward for further increase. Now that means that you have seen and you have noticed that the candlestick always represents 3 months. If I place it here now, if I change this from 3 months to maybe 1 week, you will see that it will be showing you the 1 week data for all of the market movements that you can see here. So now you can see that my chart has also changed, right? And you can see that if I move from one candlestick to the next candlestick, so it's showing Monday 4th, Monday 11th, Monday 18th, Monday 25th. So it's showing us one week what time frame. Now, because it's showing us 1 week time frame and you have understood what candlesticks are, you now need to understand that, okay, what are the technical indicators that I am going to be using to determine the uptrend of the market, and also use those technical indicators to determine the downtrend of the market. Before now, we looked at using technical indicators like Bollinger Band. We said use Bollinger Band, use RSI, Relative Strength Index, and also use what's the last one?
Volume composition.
MACD. MACD was the last one. So we just typed in. So how do we use the indicators? You click on indicator here. You type in, we want to use the indicator called Relative Strength Index. And the indicator called Relative Strength Index, you click on it. And so, okay, this indicator, we are to use this indicator to determine the uptrend or the downtrend of our market. Now, the indicator Relative Strength Index, what we can also do is to compress our chart a bit again. And so, okay, what happens whenever this indicator Relative Strength Index is being used to determine the direction of the market? Now, ideally, the indicator of Relative Strength Index is an oscillator type of indicator. So you click on setting, you can remove one of these. So these indicators, ideally, the indicator tells you the movement from trough to peak. Now, whenever you can see this indicate this relative strength index has a band, a pink band here that is showing from 30 to about 70. This indicator, which is the relative strength index, has a pink band that's showing from the 30 mark to 70 mark. There are important levels that you must know with this relative strength index. The important levels you must know with the relative strength index are level 55 and 45. So let's say 45 here. Let's say another level you can place. You take a trend line to the. Can you see where I'm picking my trend line from? So this is how you use some of the trend lines. You use trend lines to be able to mark certain regions or certain areas. So I want to mark the 55 region, which is this. So these are two key levels that you watch out for when using the relative strength index for analysis. And when using the relative strength index for analysis, whenever the relative strength index is at the bottom of the chart, it then means that the relative strength index has been oversold. Whenever the relative strength index is at the top of the chart, it means the relative strength index has been overbought as well. Now, whenever a market is overbought, it then means there is already too much demand for that particular there is demand for that particular market. And there is in market cycles, when the market is overbought, as people are buying, the market will definitely correct itself. You can see that when this market went up, it came down. When it came down, it went up again on that cycle, then made its way down again, went up, made its way down again, went up, made its way down again. But you can see this time it had a support around that 45 region. Remember I said these are two key regions that you must take or pay attention to. You can add one more just for an expert overview, which is the 50 region. You can notice that there are different data points that touches that line. Here you can see one data point in 2012. You can see which other data point. Another data point is touching here in 2020 as a resistance, and you can see that we have currently broken through that particular data point. And whenever we break through the 55 region, always we are set for a bullish run and a new all-time high. So you can see we are currently facing a very strong resistance here, because this is the reason why if you look, I told you that the secret to charting analysis is to always look left. So if you look left a bit, you will see that there is a level here before now. There's a level here. There's also a level here that is seeing that maybe Bitcoin or this particular Bitcoin does not break this level very fast and start rallying up. Now, also notice that if I collapse this chart, whenever we have been at the bottom here and you were able to buy, if you're able to buy, you will notice that the people that bought this time of the market when we are at the bottom here, they made really good gains. When we fell again to the bottom, if you are buying at this bottom, you'll be making good gains. When you come and buy again at this bottom, you will definitely make good gains. And people that are buying now at this bottom, they will definitely be making some good gains. Now, 1, 2. So this is forming like a double top. So let's say since this is forming like a double top, we crash down small a bit. Let's say we crash down small a bit to this place. We can now start rallying up again for further highs. Now, how do you now use this to determine the market, whether you should enter or not? This is how you use it to determine the market. Can you see this place of your this place that is close to the bottom, that's close to the 30 region? Right now we're at 38 on this level. See this level, we're at 35. This level we're at 33.
Yeah.
This level we're at 29. So once you see the market come to this level from a 1 week perspective, you can always be sure that you will buy the market here and make money. It is not advisable to buy the market at this top. Never buy the market when you see it at this top, except you want to short the market, which is something that you'll be doing for your futures contract when you are buying long or selling short. So shorting the market, you'll be selling short so that you can make profit. This financial market is one of the best wealth creation tool that has been made available to man, because you can make money from it when the market is going up, and you can also make money from it when the market is coming down. In this case, we are hopeful to make money from it as this market continues to go up. Now, that is how you use the relative strength index to determine your market. If it is at the bottom here, you buy. If it's at the top here, you sell. If it's at the bottom here, you buy. If it's at the top here, you sell. If it's at the bottom here, you buy. As you like now, you can enter into this ride and be enjoying it as it's going up. But once it gets to the top here, above this line of 70, you do what? You sell. If you want to use the second indicator, which is, so let's delete this one now. Let's take another indicator. The second indicator we are using is MAC. We learned MAC the last week. So for MACD, let's just look at it briefly so that we refresh our memory. MACD. Whoa, so many MACDs. Alright, so for the MACD, it's pretty easy, just like we said. Whenever this orange line is at the bottom, right, the market is going up. Whenever the orange line is on top, the market will come down. At this point in time, the orange line was on top and the market came down. The orange line was at the bottom, the market went up. The orange line came on top, the market went down. And now the orange line was at the bottom. You can see the market is going up. So you just use these principles to be able to ensure that you can make some profit from the market. So we see that currently with the current state of things here, our orange line has been at the bottom from August 2022 and up till May 2023. It has been at the bottom all this while. It seems like it's looking at maybe crossing a bit to come and take a support somewhere here before it crosses again for upward trend. That would let the market play out by itself. So what you need to understand on that part is the fact that if you see this orange line here now, if you compare it to what you have on your charts here, can you see that it will go up? Can you see this? It will go up. Can you see this? It will go up. And once the blue, right, is positioned in alignment with that, it will always respect this theory and this principle. Do you understand? Do you understand? Do you understand?
Yes, I understand.
Alright, so the last one we are using now is the Bollinger Band indicator. So let's type it in BOLLINGER, Bollinger Band indicator. So for the Bollinger Band indicator, it is pretty much straightforward. All you just need to do, you click on it. When you click on it, you will see something that will come out on top of our chart. Can you see what came on top of the chart? We saw this three. Can you see it? Yes. So ideally, the Bollinger Band is made up of three lines: an outer line, an outer line, a bottom line, and a middle line. Sorry, two outer lines and a middle line. So these two outer lines, one is at the top, one is at the bottom, and then the middle line is called the moving average line for it. Now, what do we how do we predict the market can go up or can come down using these lines? Now, whenever the body of a candlestick breaks through the moving average, most times there is a very good uptrend for that for that um, coin. So you can see the body of this candlestick is what broke through this. The body of this candlestick is what broke through this moving average here. Now, if you also look at it, the body of the candlestick, you can see in the case of red now, it broke through this moving average and you saw that we plummeted down. So whenever the body of the candlestick breaks through, it is either spelling a doom or a good time to sing praises in the market. Now, from these three lines, notice that the chart is moving in such a way that it moves to the top of this Bollinger Band and then moves to the bottom of the Bollinger Band and moves again to the top of the Bollinger Band, moves again in that same direction to the bottom of the Bollinger Band. It tried to move to the top of the Bollinger Band here, but there was so much resistance here coming from this middle line and moved to the bottom of the Bollinger Band. Once it moved to the bottom of the Bollinger Band, you can see that it has gotten to the top of this Bollinger Band and it's looking at a way to possibly move to the bottom of this Bollinger Band again, except maybe there's a very good stopper for it in terms of maybe very good support at this level that would help it to go up or would help it to pump forward for better direction. However, this is where you are able to understand such movement. This is where you are able to understand such movement. Once you are at the top of the Bollinger Band, sell. Once you are at the bottom of this Bollinger Band, buy. Once you are at the top of the Bollinger Band, sell. Once you are at the bottom of the Bollinger Band, buy. Once you are at the top of this Bollinger Band, sell. Once you see a candlestick shooting out from the bottom of this Bollinger Band, buy. Same thing here. As it's coming out of the bottom of the Bollinger Band, sell. As it's coming out from the top of the Bollinger, as it's coming out from the bottom of the Bollinger Band, buy. As it's coming out from the top of the Bollinger Band, sell. Like if you had sold here when it was coming out of the top of this Bollinger Band, you would have secured your profits. If you had bought here from the bottom of this Bollinger Band, you would have made some more profits. So this is where you use the Bollinger Band to quickly understand the uptrend and the downtrend of the market. Do you understand? Did you understand that?
Yes.
Okay. Is there any question you'd like to ask?
Please, with the Bollinger Band,
Yes.
it is three lines, right?
Yes.
So the two blue ones and that yellow one in the middle.
Yes.
Okay, so will you use the three or like you based on just the yellow one in the middle? Because that part your voice was breaking, so I didn't really get that part.
Okay, it's three of them that you use. So how do you use the three of them for the prediction? Is either the middle one is acting as resistance or support, but then you put your focus now on the top of and the bottom of the Bollinger Band at most. Like now, see once when it was at the top of this Bollinger Band here, and it started. Once it's at the top, you can see that it shot out of the.
Yeah, the screen is not showing.
My screen is not showing. Oh my god.
No.
Okay, let me quickly present that information.
Okay.
So you can see a close look into this Bollinger Band structure. You will see that once it's at the top of the Bollinger Band, you must sell. And once you are able to sell
Okay.
there, you will see that it will most likely come to the bottom of the Bollinger Band again. That gives you a signal to buy. So at the bottom of the Bollinger Band, it has a good signal for you to buy. At the top of this Bollinger Band, if you are here, is a good signal for you to sell. When you come to the Bollinger Band again for something like this, it's a good signal for you to what? For you to buy. And when you get to the top of the Bollinger Band again, it's a good signal for you to sell. Just like if you are sold here at the top of this Bollinger Band, you would have not lost. If you are sold here, you would have sold at 30 something $1,000 Bitcoin. And Bitcoin today is currently at $26,000 or thereabouts. So
Yeah.
it helps you to protect your capital, it helps you to protect your portfolio against losses, understanding where these things would stop in the what in the market. Do you understand it now?
Yes, please, I understand as well. And also the MACD. The
Okay.
MACD. That one, the orange line, like, how do I know if it's on top or it's at the down? Because I didn't really see it clearly.
Okay. For the MACD, let's go back there
Yes.
again. All you just need to do now is go to the indicators. Once you go to the indicators, search for MACD, and then you click on it. You click on it, it will show you that indicator. You can delete one, you can click on this one. If you want to delete the Bollinger Band, just click on the outer lines here. If you click on it, so just click on delete to delete. Let me see the wall. I'm waiting for it to load. It's not loading fast there. I don't know why our message is not showing for this one, this particular one. Work. Let me open it in another chat. So if I open this in another chat, all I need to do indicators, put on MACD. So can you see the MACD now? Can you see MACD now? Can you see the MACD? Can you see the MACD?
Yes, please, I can.
Okay,
Yeah.
so the MACD, there are two lines. One is a blue line, one is an orange line. Once this orange line is on top, once this orange line is about to cross to the top, like somewhere here now, and you get out of the market. Once this orange line is about to cross to the bottom, like somewhere here now, you would enter into the market. Like if you are to look at this chart very well now, if you are to look at this chart very well, you notice that the time when this MACD wanted to cross to this top, which was somewhere here, you should have gotten out of the market, because you can see that there was a downtrend in the market. resistance at this point, you can see that as soon as the orange line was on top, the market started falling down, then consolidated. As soon as the orange line came on the bottom, you can see that the market went up small. Now the orange line is trying to consolidate to quickly come on what? To quickly come on top. So there might be a bit of downward trend to what in the market. However, it is, you must now be prepared because you now know the direction of the what of the market. Does that answer your question and clarify it for you?
Yes, please.
All right. So before we go further, we must look at a critical. Before we go further, we must look at a critical side of our discussion today, which is resistance and support. Which is what? Resistance and support. Now, at every point in time, every resistance becomes a support, and at every point in time, every support becomes a what? A resistance. Remember again, I said at every point in time, every resistance becomes a support, and at every point in time, every support becomes a what? A resistance. Now, how do I mean? Every support becomes a resistance, and every resistance becomes a support. In a case where the market, ideally, the market is always sinusoidal in nature. The market is always sinusoidal in nature, like this, always sine. Can you see this diagram?
Yes, please. I can see it.
Okay, so okay, so let me try to get this one up from here. So let's imagine as it's trying to fall down now, it now starts rising. Rise, rise. Now, so imagine dotted lines or imagine horizontal lines. Let's imagine horizontal lines cutting through all these different levels.
Yeah.
Imagine horizontal lines crossing through these different levels. Now, this horizontal line that is crossing these two different levels, they represent different Now, take a close look. Pay attention. Here is every top of this thing is called a resistance. Every bottom of this thing, every top of this thing is called a resistance, and every bottom is called the support. Every bottom is called the support, support, resistance, stop, resistance, stop, resistance, stop, resistance, stop, resistance, stop, resistance, stop, resistance, yeah, and then support. and then support, and then support. So how do we then navigate around this? Ideally, the market, let's imagine that the market is moving in this direction. Imagine your market is moving in this direction. So the market moves in this direction, tries to rally up from this point. It could not rally up and maybe falls back or have a retracement back, and then finds a support level here. When it finds a support level here, it tries to rally up back. As it rallies up back, it was able to break. The secret of chart analysis is always look left. So if you look left, you will find the previous market action here, but the previous market action here could not hold it. What happened is that it was able to break that previous market action here and form a new higher high and form a new level or a new high point of the chart, which we call this. It formed a new higher high, and when it formed a new higher high, it's rallied, which did a retracement back. But that retracement back, because if you look left from here again, if you look at this place, you see the secret to chart analysis is always look left, and you trace it back, you see that there was a previous market action. So sometimes you might ask yourself, why is it that the market does not always just have a free fall? The reason is because the previous market action that is on the chart always acts as a resistance or a support for that financial instrument that you are trading on. Now, in this case where you have gotten to a support here like this, you can see that the support level bounces off the chart again. It helps the chart to bounce up, and as soon as the chart bounces up, it broke the former all-time high, and this became the new all-time, and this became the new higher high. When it broke the former all-time high, this former all-time high automatically changed to become a new higher low. So this automatically changes to what? To a new higher low. Now, from the higher high, you can see we got rejected from that level and maybe got to this support point, and the support is still holding 1 2 3 holding points. And there's a rule in the market that whenever a market or a price action tests a particular a spot for more than 1 2 3 times, the spots, that place would give way. And if you notice, this level 1 2 3 times we have tested this level. So this trying to rise up, getting to this resistance level, and whenever you see resistance like this 1 2 on the same level, it is called a double top type of resistance, right? So it gets to this level, it got rejected, and then there was a downturn or a crash. And when that crash happened, because it has tested this level before 1 2 3 times, you can see that it came down to make a new low point in the chart. And the low point that it made in the chart most likely or most definitely will become the lower low of the chart. That's the lowest point that chart has ever possibly gotten. And then you can see it bounces off for resistance. And that resistance, you can see, because of the previous market action, there's support. So you can see here, that level before was carrying something called support. That level before was carrying something called support. But now, see, that same level is carrying something called resistance. Now, this same level is carrying something called resistance. What happened that this level that we used to support now became a resistance? Because this market structure here was broken. So once this market structure here was broken, those things that used to support the market from falling down now has now become a resistance that is hindering the market from breaking this point or from going beyond this point and rallying up for what's new price actions. So that's the reason why we, at the beginning of it, we defined it and said at every point in time, every resistance becomes a support, and every support also becomes a what? A resistance. So when that happens, you see that the lower low point, this becomes a new lower low, and then trying to rally up, hits a resistance, falls back again. Maybe this time, let's say maybe this time it fell back to like let's say this time it fell back to like these levels. Let's say it fell back to these levels. So it falls back, and you can see here is holding this former support. If you look left, the secret to charting analysis is to always look left. So if you look left, you can see this former support here is still holding here as it was as that support region for it, and bounces back forward for higher highs. And you can see here who held our support again, and it's bounced back straight forward for the highest point or higher highs in the chart. And that's the reason why now that this lower lowest point, this will now become a lower high, and the next one will become a lower high as well. So if you draw a trend line here, you see that they do what? They follow a good straight line support system that can take them to the top of the chart, just like you can see. So you can see this now, this one hit resistance, came back to support, started rallying up again, came back here and broke that former resistance to form. So this is now the new higher high. This is now the new higher high, and no longer this one anymore. So this one will now turn to a higher low. So on these notes, I have been able to explain some of the concepts around the resistance and support. Are there questions that you would like to ask, or do you understand? Do you understand? Are there questions you'd like to ask?
Please, you see, when you started, I want to ask a question, please. The diagram is up. Yes, exactly. Please, you see, when you drew the diagram and you show the support and the resistance, you were like, when it goes up and it like when it comes down and it's going up, that lower point is the support, right?
Yes. Mm-hmm.
Yes. And when it goes up and then like it falls again, that point there, that higher point there is the resistance.
Yes.
So
Yeah, a labeled
the
arrow.
point, yeah, very labeled. So if it falls again and it rises higher than the first one, that one is the higher high.
Yes.
Okay, so that straight line, that short dashes that pass through the resistance.
Yes.
You see, you circle the point. You circle the point. I didn't get that before. What is that pass called? Yes, that point.
Okay, I said it was trying to rally up and broke. If you look
Yeah.
left now, you see that there was a formal market action there. Ideally, that formal market
So
action there,
it
it cuts across that point. So instead of us to make that point to be not to be clean as we are drawing it, I just use the circle to indicate that there was a formal market action there that was broken before we now got to this new higher high. Only when you break a formal market action point like this before you truly get a new higher high. Just like if you trace this point of our higher high forward now to what happened maybe in 2023 now, you see that it broke that market action there, and that's why there's, can you see I even still circled there a bit
circled it.
somehow so that you can relate to the information like that.
Okay, yeah, I understand. I understand now.
Okay, so
Yeah.
on the basis of this now, truly it is for us to get back to our chart and see how do this truly apply to our charts. Now, how does this apply to our chart? You come to the chart here and say, we're looking at this chart from a 4 hours perspective. From a 4 hours perspective, um,
Okay.
from a 4 hours perspective, let's see what you can have here. Now, imagine this chart is trying to, okay, from here now, this chart is, let's see which one should we use. Um, um, um.
Please, one more question. When does resistance become a support, and when does support becomes a resistance?
When it breaks, so at this point is when resistance becomes support. And so this is when, can you see, okay, look, can you see this former point of resistance now, right? This former point of
Yes,
resistance,
please.
this was a former point of resistance here.
Yeah.
Now,
Yes.
at this former point of resistance, you can see that when the market fell down, started falling down, this resistance level became a support point for the market.
Yes. Yes.
And notice that when market was also trying to fall down, it still respected that former resistance level as a support. However, it has been tested more than once, more than twice now here as support. It was trying to
Yes.
hold again as support, but it's now very weak, and that's the reason why it broke now. And notice that support level now. Can you see this support level before that we were here? This one now is trying to rally up. Some of them to allow it to give way now. They say, okay, well, we that supported you before will be your hindrance to go up. So truly,
Yes.
even in life, you notice that people before that used to resist you from doing a couple of things. By the time you finally put in high level of energy and effort and you break through the barriers and you shock them, sometimes they start becoming your
Yes.
biggest supporters from falling. And the time that you now maybe mess up or something, or maybe you are unable to do something and you maybe break that support,
Yes.
they resist you so much again to go up again in life. So just like life situation, that's how chat is.
Okay.
If we can
Yeah, I
put it
understand.
in that context. However, that's when it actually turns into support and resistance. You can see this flipping here. You can see that support point now turning into resistance. So at every point in time, every
Yes.
support becomes a resistance, and every resistance also becomes a what? A support. Like you can see this resistance point here now. When this chart fell down to this point, you can see it is holding. If you look back here, you can see it is holding a support. If we go to
Yes.
our chart now, let's find some. Let's find one here. So this is the chart of Bitcoin from this is the chart of Bitcoin from 2000 and no, from February 2023. Let's say from February 2023.
Yes.
So now
Yes.
from January 2023. So now we tried to rally up here. We could not rally up here. And why couldn't we rally up here? Because if
Yes.
we actually trace back and look back a bit, we will see that there was a bit of, if we tried to rally up here, we couldn't rally up. We tried to rally up here, we couldn't rally up here. And if we look back, we will see that there was a previous market action here that possibly wanted to go up but could not go up, and then we fell back. When we fell back to somewhere that and stopped falling, if we look at it too, if we trace it back, we'll see that possibly we had a former support point, maybe previous market actions here, and that's the reason why we did not just have a free fall. we were able to hold this level of the market. And when we held this level of the market, we started trying to rally back up. When we tried to rally back up, you see we could not rally back up so far, because at that point here we tried to rally back up so far. If I put this line here now, you will see that at that point here we tried to rally back up so far. If you look left, there was a previous market action there. Even before we got to this base of this support, this tried to hold the market, but it could not hold the market, and it broke down. So this rally now, this short rally that we just rallied, can't go beyond that point. So it comes back, tries to do a pullback, and breaks that support, and breaks that resistance level rather. After breaking that resistance level, it comes to, so this is where you are now looking at it that okay, this should maybe come and form a higher high, and you can see that it broke that resistance level, continued to rise up, and came to form a good higher high here. So this is the new higher high for this chart, and when it formed the new higher high, you can see it started retracing. It retraced to this point, this former market. You can see when we got to this point, instead of it to continue to fall, the candlestick broke into two. Can you see that the candlestick started again, because it was trying to hold that level that has been a former resistance point here. It was trying to hold our support, but it was not strong enough. So even if you see, the candlestick had to start from a new time frame, which is like 4 hours, and continue to fall. When it fell, and gained some momentum, tried to rally back. But when you try to rally back, you can see that resistance is so much, because when you look left, you will see that's where this resistance is tracing to. It is so much that 1, 2, 3 data points. Can you see? 1, 2, 3 data point has tested this line before. So this time, as it's coming down, it came rushing down like a mighty, just came running down like a mighty wind. So after running down like that, it found a base, or it found the support. And once it finds that type of support, can you see where it found support? On top of another resistance. Can you see it? If you look market action now, can you see where it found support? You look left. Can you see where this market, after breaking this, can you see where it found support? On top, just on top of a former resistance. So when it found support there, you can see it started rallying up and came to form a new higher high here. So here is no longer the former higher high. This is now the new higher high. Here it becomes the higher low. So okay, I think this will become the higher low here, because this is closer to this than this. So this becomes the new higher low, right? And you can see that this is just how the sinusoidal nature of the chart is. And if you can follow and respect these levels, you will be able to make money from moving between the resistance and the supports of the market, and making profit from those volatile. You'll be making money from those volatile points in the markets. Is there any question you'd like to ask? Is there any question you'd like to ask?